What is going on, everybody? Estas here. Welcome back to another video. So check it out. The markets ended up rallying into the close. We got to break that down in this video. We also have to go over earnings. We have about 5 earnings reports to break down. And of course, I want to go over my thoughts on the markets, what I'm looking to do. But before we do, make sure to get your free money from Moomoo. You get up to 5 free shares of stock, each up to $2,500. All you got to do is use my link down below, deposit at least $100. And if you want a free share of Twitter as well, and by the way, this runs out at the end of May. All you got to do is deposit at least $2,000 and you get that free share of Twitter guaranteed, and those 5 other stocks, and all that is linked down below. And you get 6 stocks from Webull as well, linked down below. And with that being said, cheers. We got some water today, guys, and let's get right into the video. So the markets closed about 30 minutes ago. The S&P 500 went down 0.8% at the close. The Nasdaq closed down 2.2%. Russell down 1.6%. And funny enough, the Dow, which in my previous video was down a little bit, it ended up going up a little bit on the day, closing up 0.1%. The VIX went up 3.4%, and we had gold up 1% and silver almost up 2% on the day. And before we dive into this inverse head and shoulders that I'm seeing here on SPY on the 10-day chart, let's pull up the intraday and see how the end of the day ended up playing out. So I think when I filmed my previous video, it was right around 2:30, 2:45, and literally since that point, guys, it looks like we sold off until about 2:50 on the East Coast here on SPY. It hit about 390 at about 2:50 p.m., and then it ripped all the way to $395 right before the close of the day. So we're talking in about 45 minutes, SPY ran up 1.3%. And in that same time period, we had good old triple Q. Let's see here. This ended up running up from about, let's see here, right around power hour. Where was it? 284.60. It ran all the way to about 288. It ran up 1.2% in power hour. Pretty impressive move there, guys. So that's what I'm seeing on the intraday chart. Nice. Essentially what we got, guys, is a huge dump in the morning, and the rest of the day was us just filling that gap up to the pre-market high. That's essentially what happened. I mean, look, triple Q was at 289 pre-market. It failed. It went all the way down to 282, and then we closed near that 288, 289 resistance from pre-market. So we dumped, and then essentially the entire day we just filled the gap back up to pre-market. And you guys can see SPY did that same thing. We ended up dumping. We ran up to the pre-market level. We filled that gap, and I guess the only difference here is SPY actually broke out of the pre-market high, where triple Q did not quite yet do that, right? Which tomorrow, who knows? It might do that if we get a bounce back day. We might end up taking those pre-market highs out from today, and I guess only time will tell, right, guys? Only time will tell. So pulling up this 10-day chart, when I was prepping this video, I noticed an inverse head and shoulders here on SPY. You guys can see the left shoulder, the head when we hit down to 380, and the right shoulder based on today's price action, where we held the neckline at about 387. We broke back over 390, and obviously we closed in the mid-390s above both moving averages, which is good here on the 10-day chart. So if this plays out, guys, hear me out. If this inverse head and shoulders plays out, and let's say we start moving above 397,400, which is a big sticking point. 397 was that high from yesterday. If that point starts breaking, and let me actually set another alert here, mark is at or above $398. If these points start breaking, the right shoulder in this inverse head and shoulders could complete anywhere from, let's say, $408 to $410 per share, meaning we could be in store for some sort of extended pop. And again, that's if we start moving above 398, and especially $400. So set your alerts, be patient. Just because I'm seeing this doesn't mean at 100% is going to play out, but we are watching it regardless, guys. And when it comes to triple Q, I'm not seeing an inverse head and shoulders on this one right now. And the thing is, the big difference between this and SPY is the fact that, look, if this held above, let's say 287, you guys can see if I draw out this neckline, we actually broke under the neckline this morning, so that pretty much threw the inverse head and shoulders out the window. But who knows, maybe if Triple Q recovers over 290, that is where we could get some sort of relief rally, relief pop, whatever you want to call it, guys. So I'm going to set my alert markers that were above $290. And with that being said, those are some thoughts on the markets here in the short term in terms of these charts. And now let's dive into some earnings reports. We had a bunch of companies report earnings today, and they're not the most exciting companies, I'll be honest, guys, but they did report earnings, and I figured, hey, let's break them down here on the channel. Make sure you all smash that like button and subscribe if you haven't done so already. It really helps me out overall in the YouTube algorithm. So Best Buy, ticker symbol BBY. Let's pull it up. They reported earnings this morning, and they went up on the day, 1.2% green day for Best Buy. And if you take a look here at the stock price, guys, it's just been destroyed. I don't know how else to put it. From $141 back in November of 21, now it's all the way at 70. It actually got under 70 a couple of days ago, or maybe that was yesterday. We got down to about 68, 69 bucks, meaning it is down 50+% from that all-time high. And they reported earnings this morning, and the earnings were decent, I guess you would say, right? Considering a lot of other stocks, the companies that we've seen report, their earnings have not been good, for the most part, right? And obviously there's exceptions. So when it comes to adjusted EPS, Best Buy ended up doing $1.57, which missed that $1.63 estimate. Revenue beat though, $10.65 billion versus $10.43 billion estimated. So beat revenue, missed adjusted EPS. And in terms of guidance, I guess you can say they lowered guidance a bit, which isn't the best, but considering Best Buy, guys, the stock is down 50%. A lot of this is already priced in, and especially when we got the Target earnings, Walmart. Best Buy got hit that day, I'm pretty sure. It might have been this day where it went down from 83 down to about 73 in one day. You heard that right. It got hit on that day very aggressively. They see full year 22 same-store sales down around 3 to 6% versus the prior estimate of down only 1 to 4%. So that's not good. That's not a piece of positive information, right? But the stock, like I said, it probably had that priced in. It's moving up on the day. That means it's most likely priced in. They see full year 22 revenue of $48.3 billion to $49.9 billion versus the prior estimate of $49.3 to $50.8 billion. So they're guiding down a little bit, versus their prior estimates, but overall, the stock doesn't really care. A lot of it's already priced in, and if you pull up the 3-year chart, you can just see the craziness of this drop. We're getting pretty close. Not really close, but we're at $70 now. The low from March 2020 was right around $50. And if I pull up the max chart here on Best Buy, guys, this looks like a very healthy pullback to me. If you pull up the max chart, and do this for any stock, honestly, any stock you're looking at, it gives you a perspective of not just a year, a couple of days. It gives you decades of years of price action, and it goes to show, and it gives you a perspective on how overbought a lot of stocks got in the past year or two. Look, Best Buy at 141, that is just unbelievable. That's so overextended. But now at 60, 70, $50, right around, this main moving average on this 3-year chart, that is a much better price just simply looking at the chart, guys, right? So please, seriously, do this on your own. When you're thinking about investing in a stock, buying a stock, doing whatever, sometimes go on a larger time frame and see whether or not it's ridiculously overbought, oversold. And obviously, don't just use that as your only indicator to buy or sell, but use it in your decision-making process, right? That's what I personally do, and it's really helped me over the years that I've been, trading, investing, doing all this fun stuff, right, guys? So the next one is Nordstrom, which also just reported today, but they were after the bell, unlike Best Buy, which again was in the pre-market. So Nordstrom did adjusted EPS of -6 cents versus -5 cents estimated. So they missed slightly on EPS, but they beat on revenue, $3.47 billion versus $3.28 billion estimated. And we got some guidance. They see full year 22 adjusted EPS of $3.20 to $3.50 versus the $3.12 estimate. So that's great. And they're expecting sales growth of 6 to 8% year over year. So it makes sense why this stock is erupting right now. It closed at about $20.70. It went down on the day, too. It went down 3.6% on the day. And now after the bell, it is up to $22. It's currently up 7%, but it got all the way to $25 initially, and it was up about 23% at that point. And who knows, maybe if we get another rally or more momentum, this could go up and test that recent high that we just hit about 30 minutes ago. And, this could start breaking out. Who knows? And at this point, I have my alert set at $26, right by this 4-hour 180 SMA. You guys can see it here on this time frame. And I also said, look, Nordstrom, I see a head and shoulders. I said this a couple of days ago. But if we start moving out of $26, we break the neckline of the head and shoulders, which is right around 26, 27. This could really start taking off, especially with an earnings report, which based on just that guidance alone, I can tell you the market likes that earnings report, right? And we'll see. Maybe things change during the conference call. Definitely possible. But as of now, they barely missed EPS. They crushed revenue. Their full-year adjusted EPS, guidance is strong. Sales growth, 6-8% year over year. Not too shabby. I think JWM might start breaking out. So I have my alert set at 26. I might as well put another one at $28 a share. And we'll see what it does from there, guys. Let me know your thoughts, as always, in the comments on JWM and Best Buy. But don't click off the video yet. We are not done yet, guys. We have a couple more to talk about. Intuit, INTU's the ticker, they ended up reporting as well. $7, or they did adjusted EPS of $7.65 versus $7.58 estimated, so they beat that. And revenue of $5.6 billion versus $5.51 billion estimated. So nice double beat for Intuit, not too bad. And based on this chart, me personally, guys, I'm not looking to fight the trend. So I'm not going to buy it myself here, even though they double beat. But if they start moving above, and this might sound crazy, but 400, 450, right by this main 180 moving average on the 4-hour time frame, that is where I'd consider picking up some shares on a reversal. But for now, it's in a no-touch zone for me. And that's just for me personally, right? I'm just being honest with you guys. The next one here is Toll Brothers, which they reported. I don't have it written in my notes because last time I checked, they didn't have their numbers out yet, but I guarantee you they have them out now. Let's take a look. Toll Brothers, Q2 EPS of $1.85 versus $1.54 estimated, so they crushed EPS, and it looks like they beat revenue, $2.28 billion versus $2.06 billion, so double beat for Toll Brothers, and they see Q3 deliveries of 2.75K units, full year 22 deliveries around 11,500 units, and Toll Brothers reported Q2 22 delivered homes of 2,407, and it looks like, are they going to buy back some shares? Oh, yes, they are, guys. The board refreshed authorization to repurchase stock by up to 20 million shares, or about $900 million. That's a lot of money, guys. So they're going to be buying back shares. They double beat, and that's pretty solid. I'll be honest, I'm surprised, and it looks like the market is surprised a little bit as well because we were down on the day for Toll Brothers. A lot of people were probably dumping out of this one, expecting bad numbers. It went down 5% on the day. I mean, it bled way more than the overall markets did, but now after the bell, it ran all the way to $48. So initially it was up 7-8%, and now it's chilling at about 46. It's up 4%. It pretty much erased all of the losses from the day. So Toll Brothers is kind of in that same pattern as Intuit and a lot of stocks these days, guys. They're all downtrending for the most part. So as a trade for me, Toll Brothers is in a no-touch spot until it starts, if it even starts, breaking above 50. Until it starts breaking above $50, and that is where my alert is set. And mind you, that is the 180 estimated resistance here, but also $51. That is a multi-month resistance for the stock, so it's got to break out of there for me. And until it does, I'm on the sidelines, and I'm going to be patient, guys. And the next one we're going to talk about, which last I checked, it was in free fall mode. It is Urban Outfitters. Let's take a look here. Oh my God, they actually recovered. Holy crap, look at that. Look at this. Urban Outfitters went down 8% on the day, closed at $18, and they reported, and the stock shot to 15. So it lost about 15% value like that. And then it now ran up all the way. It looks like it's above where it closed. Talk about volatility, guys. Gee, so it went from 18 to 15. Now it's at 18.30. It is up 21% from that low that was hit just 40 minutes ago. No joke. If you put $1,000 40 minutes ago into Urban Outfitters, you'd have $200 now. If you put $10,000, you would have a whopping $2,000 right now. I know it's crazy, but that is the volatility, how vicious this thing has been moving. You would have made a lot of money. Now, did I buy it? No, I'm not a crazy gambling madman, but if you bought it, you made a lot of money, guys. And for me, you know, my rule is I do not buy before earnings, after earnings for my short-term trades. I don't gamble anymore like that, buying puts, calls, shares. You know, you could do that, but it will come back and bite you in the you-know-what in the long term. Trust me on that, guys. So that is Urban Outfitters, and we have two more to go over, and these two did not report earnings today. Number one is Tyson Foods, which crushed it today, went up 1.6%. It's knocking on the door of $90 a share, guys. It's at $89 pretty much right now. And notice right around 90 is where these moving averages are. So if Tyson Foods starts cracking above 90, 91, 92.50 where my alert is, I expect a nice 6 to 8% move from that point to $100 a share, or at least that's what the chart right now is telling me, especially if we end up breaking out of that $92 level. So Tyson Foods, I like it. JP Morgan is another one I'm liking. The banks are continuing their rally. Today, JP Morgan went up, excuse me, guys, 1.4% on the day, and it closed right at 127. Crazy, because 127, if I zoom in, not only is it the 180 SMA on the 4 hour, so big resistance there, but also 127, if you guys recall, I talked about this yesterday, that was support all throughout March into the middle of April, and obviously we broke it, and then it became resistant. So at this point, I'm telling you, if 127, 128 breaks, there's probably a big move coming in JP Morgan. Now, it's probably not going to go to 170, the all-time high, like that. But could it go from 128, 130 to about 140? You know, that's where I think it could go. Absolutely, in my personal opinion, of course. So watch out for these stocks, guys. Set your alerts. Keep your eyes on these charts. And I understand a lot of you have full-time jobs. You can't watch the markets all freaking day. Heck, I don't even watch the markets all day, guys. I don't watch them all day. It drives you crazy. But if you're one of these people that can't watch the markets at all, the best thing you can do is set alerts. Seriously, set alerts and have them pop up on your phone. You can set that. There's a setting on ThinkOrSwim. So if you're away from your computer, set some alerts, and you can then buy stocks if you've done the due diligence and you know, oh, I want to buy it here, I want to sell it here. It makes it easier, guys. So with that being said, cheers. Thanks for watching. Hit that like button, subscribe if you guys found value, and make sure to drop me a comment. Let me know your thoughts. Join my Patreon if you want all my moves in real time, call outs, morning videos, more access to me. That's linked right down below. And don't forget to get your free money from Moomoo, up to 5 free shares of stock, and you can get a free share of Twitter as well, guaranteed. Use that link down below. And get your 6 stocks from Webull as well, also guaranteed. Link down below. And with that being said, cheers. I'll catch you guys in the next video. Thanks for watching as always. Peace out.